Welcome back to the 4-Star Podcast. I'm here today, Brian Kasal, your host. I'm here today with Mr. Christopher Reardon, 4-Star Director of Development, master of all things portfolio, trading reports, still loves his Cleveland Indians, caretaker of the Golden Doodle puppy, Hudson. Welcome, Chris.
The Cleveland Guardians now, right? And thanks.
Yeah.
Glad to be here.
The Cleveland Guardians, that's right. But, maybe they'll play better than our Cubs. We'll see. Anyway, and again, I'm Brian Kasal, founder and CEO of 4-Star, Eagle Scout, trustee of the National Boy Scout Foundation, chief dad to Quinn and Evan, husband to the amazing Trippy. Thanks, everybody, for being here. If you like what we're doing, please tell your friends, and please give us a 5 out of 5 on Apple iTunes. So today we're going to do our standard program where we're going to talk about markets, the economy, and what we see out there. Looking at it, Chris, we have a really interesting scenario playing out in the markets, right? Do you want to do a quick review of where we stand?
Yeah, so we're starting to see a little bit of shakeup, especially in the top 3 asset classes. So we still have domestic equities holding the number 1 spot, but we're starting to see a little bit of a pullback, and I don't mean pullback's probably the wrong word, but a little bit of slight tick downwards, I guess would be better. So it moved down 4 points from the last podcast. So it's at 312 is tally points there. Mm-hmm. Conversely, number 2 is commodities, and it's moving the opposite direction. It gained 11 points. So it's at 280 now. And, Brian and I were talking about this Monday, actually, where, that's getting close to striking distance. If we were to see a large movement downwards from domestic equities and a large movement upwards in commodities, that distance could close within a week easily. So, that is an interesting fact there. I don't necessarily foresee that happening, but it's a possibility for sure. International equities is in the number 3 spot, and that's actually moved down 7 points. So we're starting to see that weaken a little too. It's at 243. So we're starting to see a lot more distance between the number 2 and 3 positions than we have in the past. And then rounding out the bottom, we still have fixed income, which was equal at 114, cash in 5th, which was equal at 93. And currencies in 6th, which is equal at 46. So not a whole lot of change going in those bottom 3 asset classes, the less risky, but a lot of movement, a lot of changes happening over the last couple of weeks in the top 3.
Very interesting. The rumors of commodities taking over the top position have been there for a long time. They've only done that once in the last 11 years, only for a month or so. And then it's been since 2010, 11 years since we've had a decent commodity market. So right now, that's the short-term trend. We'll see if that holds.
Mm-hmm. Yep. Yeah, it'll be interesting to see. I mean, I think there's a lot of variables, both sides. I think there's a lot of pros to it holding, and there's a lot of, possibilities that it does fade.
Yes. Well, and then the Dow Jones and the other indexes, Dow tops 35,000 for the first time. So we're seeing markets still hit new highs. That was on the 24th of July. Today is the 5th of August when we're taping this podcast. So it's interesting. We haven't broken the high again. We had a little sell-off and a little sloppiness here in the short run, but we keep hitting new highs here. It's quite interesting. Chris, there's a lot of things going on in the economy regarding what the market would react to. So mm-hmm. I know you have a list of them. So why don't we talk those through?
Yeah. So the first one, U.S. jobless claims came out. They fell slightly to 385,000. This is the week ending for the week of July, the 30th, that week of the 30th. That brings the 4-week moving average down to 394. So slight decreases, not huge numbers there, but we are seeing the trend continue downwards, albeit it has slowed a little. It has slowed a little bit. We saw a very rapid decline originally, and it's kind of tapered off a little bit more towards the bottom. Continuing claims have dropped by 366,000 to 2.9 million. This is the week ending July 24th. This number came out. So it's still about a little over a million above where we were pre-pandemic. So kind of January 2020, I think we're at about 1.8 mil. million. So we're still a little high there, but it has come down considerably as well. So it's good trends there. It has slowed a little bit, and it might take a little bit more of a concerted effort to get that last little bit. I think that we need to see continuation of the reopening, and we don't want to see that retrenchment. So I know the Delta virus is out there now, which I think we'll discuss a little later, and that's could throw a wrench in some of this, but we'll have to wait and see. The June new orders new goods orders came out. They rose 1.5%. It was well over the estimate of 1%. So positive news there. The Institute of Supply Chain Management Purchasing Managers Index fell, albeit slightly, to 59.5 from 60.6 in June. So slight decrease there. So it's kind of factory output production. We saw that. I would call that almost a neutral number really there. It was a slight decline. Anything above 50 is still expansion. So it's still in safe territory there. And then, we have U.S. personal consumption as kind of the other piece of the puzzle that came out. It increased 1% in June, which was a nice rebound. We actually had a kind of a negative number in May. It was actually down 0.1%. So it was a nice kind of rebound there from May to June as people finally started to go out, finally started, going to restaurants, spending a little bit, going on vacations. And the last thing I'll mention, we're starting to see this tug of war, and this is causing some of that volatility in the market right now between fears of this Delta variant, possible shutdowns. But then on the other side, you have a really strong earnings season going on now. Actually, so we had about 86% of companies have topped expectations on profits. So really, really strong earnings season going on right now. So you have this tug and pull. You have the volatility, you have the news coming out, you have kind of this spike downwards. But then you have really good earnings numbers coming out. You have a lot of companies that are doing very well right now. So then you kind of see that rebound. So a lot of volatility, a lot of back and forth going on. Like you said, Brian, where we're hitting new highs or have hit new highs in the past, and then we're kind of moving back and forth now.
Yeah, no, it's interesting. A lot of numbers there that are positive and some not as positive as they could be. So we're seeing generally upward trends, but some negative trends in the short run as well. And we'll talk about why, but the continuing claims number 2.9 versus kind of a normal trend of 1.5 to 2 of continuing claims in America. We're moving in that direction. So that's good. I also thought it was interesting that the Purchasing Managers Index is well above 50. And so anytime it's above 50, there's still expansion. But then there's some negative things as well. So anyway, we'll see how the economy plays out. With a lot of more to discuss there. Thanks, Chris. So Boeing returned to profit for the first time and since the pandemic, and it's significant because this was one of the hardest hit industries. The airline industry, literally very few people were even taking airlines. They had airplanes. They had airplanes stacked up in the desert waiting for people to come back to the airports, right? And I remember flying a little bit last summer. It was pretty grim, pretty quiet. Everybody that got upgraded to first class, and then they started sending people into the back of the plane just for ballast. So it was a very strange time, but so it's good to see the airlines doing better. The hotel companies are doing better now too. We're seeing big upticks in earnings there as cash flow comes back. But the stocks are already moved. So if you're trying to buy the shares of hotel companies, Hilton and the others, Marriott, it's going to be hard because they've already moved, anticipating the big recovery. But you still can get a deal in private investing, in private partnerships, and there's some that we're involved in. They're still buying hotels at lower prices, right, without the expectation. And then we're expecting rate hikes. They're talking about rate hikes, Chris, in 23, according to the Fed, 2023. But a number of economists are really expecting it earlier, think that things should get better. And also the St. Louis Fed chief, James Bullard, says 2022 as well. So there's a little bit of divergence there. It's interesting, though, Chris, how the 10-year bond went down to 1.13%. I mean, that's unbelievable how low that is.
Oh, I mean, it's crazy that we've seen it kind of retrench back down again. But I think that the key there and what they're looking at is inflation, right? Whenever we see inflation start to get out of control, and if that's what they're expecting, they're going to have to raise interest rates sooner. And I think that's where that 2022 number really starts to come into play.
Well, and we've been talking all about inflation for months and months and months, and then the market signaling no inflation, or maybe that's a signaling that inflation will be transitory. But it's been more than transitory already. It's been a long time that we've had inflation. So, but it may be a signal that things go lower. Also the kind of some of the bad news, meaning the slowing of some elements of the economy, could be good to keep the government stimulus going. Although yet, on the contrary, many economists feel, and we feel essentially, that many of those government programs are now causing some of the retrenchment in certain areas in the economy. Even though we're seeing earnings up big, we're also seeing some numbers not come through as strong as they could. And basically, people don't want to get back to work because they're getting all those extra benefits. So why would you go to work if you can make $80,000 sitting on your couch? From all the government programs. So that's a big factor. And, we'll see how that plays out. September is the end of the moratorium on evictions, but now the Centers for Disease Control came out and announced that they were putting a moratorium on evictions, but they don't have the power to do that. So there's going to be a little court fight there. And, it's just, I think it's more of a political position than it is a real position.
Yeah, and it's going to be really interesting. I think we're seeing a real divergence. You have this section of the population that, for the most part, has been working, hasn't had any problems. And you have a section of the population that's, maybe had troubles a year ago, but then, they kind of found work or were able to get their jobs back. And you have then a small, hopefully, tranche of the population that hasn't been working. And then, at some point they have to go back to work. And is it not going to look very promising? What impact is that going to have on their retirement, their savings? You have these people that have been, pushing off their mortgage payments. There's going to be ramifications from this that exceed way down the line. So, it's going to be really interesting. And I think what this did is it really caused a big split kind of the people that have been working, and the people that haven't have been trying to, whether, maintain and sit on their couch and collect that 80,000. Eventually that's going to go out, and eventually they're going to have to go get a job, and it'll be interesting.
Yes. Well, and we've had quite an interesting time where all the states that locked down and certain states didn't lock down. And what really has happened to that? We had the fortunate experience to go to a dinner where the guest speaker was the governor of South Dakota, a lady by the name of Kristi Noem, a former member of Congress who is now the governor of South Dakota. And she talked about how their growth is stellar. They are the only state in America that never shut down at all. They never shut down any businesses. They might have used some masks and social distancing, but they let everything open and stay open. And so as a result, they were crowing about their growth, their 9% growth. And they haven't had any more bad experience in COVID in any other state. In fact, I believe they're on the lower end of the COVID experience as far as percentages. So they're crowing about 9% growth in South Dakota, and that Texas, the number 2 state, is only number 2, and they're growing at 7.5%, which is also very good, but not as good as South Dakota. So she had a really good story to tell. And so maybe part of the lesson of that last experience we went through is that maybe the lockdowns didn't work. If everyone's having the same experience, but some states shut down their economy and other states didn't, and their experience were basically the same, maybe we shouldn't be doing all the lockdowns.
Well, and I think that's no more of a starker of a comparison than New York and Florida. I mean, look at how much you have there's talk all over about businesses are moving to Florida. I mean, so you have not only the business advantage now, but then you have the disruption to business that occurred for companies that were in New York compared to companies that were in Florida and Texas likewise. So, I mean, people noticed and people moved. A lot of companies moved their businesses there. Goldman Sachs was talking about moving a lot of their divisions down to Florida, which, I mean, Goldman Sachs is a staple of Wall Street, New York, and who would have thought? But the fact that they're considering it, moving a lot of divisions, really speaks volumes.
Yes. Well, and interestingly enough, the governor of South Dakota told us also that they had 500,000 people out at the annual Sturgis biker rally, where they bring in a motorcycle. It's a motorcycle convention in Sturgis, South Dakota, that I know some people would have gone to. They brought in 500,000, and they only had 36 cases of COVID, which is a very, very infinitesimal amount. This year, they're expecting over 1 million people to attend. I think they have a good handle on how to manage that if they only had 36 cases last year. So very good. Well, so now we're talking about interest rates. Interest rates are down. The 10-year Treasury goes down to 1.13 record lows. And, we, talk a lot about that because whenever interest rates go up a little bit, people get nervous or they say the stock market will go down. But we really want interest rates to go up because at the beginning and intermediate phases of an economic advance, rates rising is a sign of demand for money. Businesses need money. They access capital. The price of capital, which is what interest rates are, goes up. Now, there does get to a point at some point where rates will eventually choke off the growth of the economy, but we're obviously nowhere near that. We're at rock bottom. So, in the final phase of an economic advance, the choke off growth number, everybody remember in 1987 when the long Treasury bond went over 10%. In fact, the famous strategist Elaine Gazzarelli at Shearson Lehman Brothers said that this could cause problems for the economy. And sure enough, later, 3 months later, there was a market crash in fall of 1987. For any of you old timers might remember that. And back then, she got credit for the crash. I don't think she called it crash, but she certainly said that long bond rates could cause an issue. And it turns out that we didn't actually have a recession anyway, but it did affect the stock market. But we're a long way from 10% long bonds, I'll tell you that. And we're going to be low rates for quite a while. So anyway, that's what it looks like now, low rates for a while. As the economy recovers and the stock market continues to go up, rates will probably be rising for a period of time.
Yeah, I mean, I think all we've known is low rates for 12 years now, 13 years. I mean, it's been really all some people have ever known. So I think the thought of a 10-year, 10% yields, it's almost how the heck do you get that? What kind of junk bond are you trying to pitch for that? Right. So I think that it's important that we do get back there. I think it's especially important for retirees or people looking to retire. I mean, you have to have these people that have to take a little extra risk than retirees have in the past, just because 1%, less sub 1% bonds just aren't going to really help them.
Yes. Well, and then since we're at rock bottom rates for interest rates now, as if you buy a bond down here, then the bond price will go down as rates do rise. Eventually they will. All economies, the rates will eventually rise. So this is probably a decent time to consider adding floating rate bonds to your portfolio, because as rates rise, then those bonds are the bonds that every quarter will get reset as interest rates rise and the yield curve goes up. So, why would anyone buy floating rate bonds when rates are falling? But now, if rates will be rising, and James Bullard thinks that they're going to be raising rates early next year, then floating rate bonds might be an interesting play here. So,
Yep.
Chris, also going on in the economy, very interesting because of the aggressiveness of China. The U.S. government, for the first time, is involved in helping industries that are strategic to our national defense, like the semiconductor industry. The quote was, "I was a venture capitalist before I was a senator, and this is the type of bet America has to make." And that is the famous Senator John Warner, the Democrat of Virginia. And he basically says we need to be involved in semiconductor industries, critical industries. China has always subsidized their industries to assure dominant position in home markets. While President Trump was in, he tariffed many of the industries in China, and the subsidy was there to promote, essentially control of our industry, and then keep jobs here at home as well. So John Cornyn, the senator of Texas, was involved in that as well. Now, the risk, however, is we've never really done that. We've subsidized farming and a few other industries, but that's old news. And so to do semiconductors is a new thing for America. And the risk of doing that is that, maybe we get used to that too much. And then we're going to be like China and some of the other communist nations, always basically propping up their industries and not letting them run. That creates inefficiencies. It also creates unemployment and other issues that they don't ever deal with in those societies, but we deal with in our society. So it could create some big implications, Chris.
Yeah, and I mean, I think that it's important. It's an important discussion, but I think it's a fine line, like you said. I mean, I think that it's important that we have. I think it's over the last year what we've seen, especially with the chip shortage, with semiconductors. I mean, that is just dragging down our car manufacturing, all this stuff. There's so many things that are impacted by an industry that's outside of our control, that it's very important, and in some cases, national security, to have at least a little bit of control. But it's a very, very fine line. And I think if you start to overstep that, or you start to get too far into it, you get inefficiencies, and it starts to become a very steep slope.
So you had some other comments that I know you wanted to make about China and their economy. So how is it affecting the Chinese economy?
So yeah, you have two new tidbits of information that came out. China's official manufacturing purchasers managers index, if I can say that, dropped to 50.4 in July from 50.9 in June. That's interesting because we're seeing a drop there. It's still expanding. Anything above 50 is expanding, but it was way below the estimate, which was 50.8. And it's very close to going below that 50 number. Once it goes below there, it is, declining. We're seeing a decrease in the expansion. So it's important to note, and we talked about it on here, is any number really coming out of China, you have to take with a grain of salt. But I think what we're looking at here is the trend. And the fact that trend is decreasing could mean that, they're probably below 50 at this point. We don't know that for sure, but we are starting to see some slowing there, which is really important. The other thing we're seeing is China's steel prices from Chinese steel companies just cratered earlier this week. And that came as we've seen, Brian, you were talking a little bit, that the Chinese government is looking at them and actually coming in and cracking down on heavy industry. They're trying to get back on track with some of their commitments towards carbon emissions and cutting and kind of that Green Deal and all that. So we're really seeing the Chinese government take a much more proactive, if you will, approach to their industries. And it's really causing a lot of havoc within the stock market over there. We saw it causing havoc in the stock market over here. And I think it's going to be something that's going to continue moving forward. So it's going to be really interesting to see, as we kind of mentioned with the semiconductors, is it's a dangerous game to play. The Chinese are certainly not afraid to play it, and it'll be interesting to see how it plays out moving forward.
Yes. Well, and they clearly signaled in China that they're more concerned with control of the economy than everything working exactly right. That IPO, DD came out, and then the next day after it was a successful IPO, the Chinese government cracked down on some aspects of the company, and the stock dropped 40%. In fact, the entrepreneurs of that stock, of that company, are now considering going private and paying all the investors back the money that they lost, because the Chinese government decided that they didn't really care about the IPO. They cared about control, and they were mad at the company for certain things they did during the IPO process. So we don't do those things here. We really want to let commerce grow, and we honor the freedom that companies have to build their business, and they just don't have the same view of it in China.
No, and it was always going to be the struggle over there. You have this this communist kind of style government more, and then they were trying to have a free market, and this is really where you see it. I mean, there's going to be friction there, right? And this is where you're really seeing that friction come to bear. So whereas the U.S., we have a much more open free market, and what we're more concerned about is that from a regulatory standpoint is that there's no wrongdoing going on.
Exactly. Well, Chris, moving on to the what we see out there segment of our podcast, we talked a little bit about the very highly anticipated RobinHood IPO. Turns out it was kind of a dud.
Yeah, so RobinHood, which is obviously the trading platform that really became famous, I feel like, during the pandemic, it IPO'd. Overall, wasn't too spectacular of an IPO, like you said, Brian. But the last couple of days this week, so this is kind of the first full week of August, it's gotten picked up, funny enough, as one of those more kind of meme stocks like AMC or Bed Bath & Beyond, GameStop. And it ran it up about 80% from its IPO price. I think it was down, I saw like 20% today. So a lot of volatility going on in the Robinhood stock, as you have a lot of just investors really flooding in and out of it, trying to make bets. I think options open today, which also is causing a lot of havoc in it. So it'll be interesting to see. I think it's kind of ironic that a platform such as Robinhood, which allowed a lot of these investors that were causing this mayhem in the first place, had that done to its own stock, kind of got unified itself.
It's crazy. Okay, well, update on regulation. We talked and then got a little grief about our comments about good regulation in a previous podcast. And, we talked about, obviously, the tragic event of the tower collapse in Miami Beach. They've now started to evacuate some other towers, and I think that's probably an important thing to do until they can get all their new plans in place. So that's all obviously very sad, but hopefully going forward, they have regulations that keep that from happening again. And we don't have any, there's always going to be errors and mistakes in the world, but if we can find a way to control it better, obviously there were hundreds of people that lost their life in that tower. It's a very, very sad story. But back to the economy, one of the big risks right now we're seeing is this new strain of the coronavirus called the Delta variant, and developed some pockets in 5 states. It's growing around the country, yet they're asking folks to consider wearing masks again. There are states out there now that are demanding masks in public buildings, restaurants, and schools. There are leaders that want to control, their people. It's increasingly difficult to see compliance because there's an acknowledgement that the lockdowns really had very little effect on the final result, where most of the states had a similar result. In fact, many of the lockdown states had a worse result as people were getting COVID and being locked down. So Dr. Marty Makary, appearing on Fox and Wall Street Journal at large, is asking Dr. Fauci to show numbers on what really is happening, and they're not getting any numbers. That people should, Dr. Makary thinks that people should live and not worry about it until they actually see numbers from the CDC. And we've talked about this before in the podcast, that whenever the political leaders and policymakers don't listen to the people and listen to the science, actually to the science, then people get upset and they react. And that's how we got Brexit. That's how perhaps President Trump got elected, where people weren't listening. Everyone assumed that Hillary Clinton would be elected president. Now we're having trouble getting people taking the vaccines. People feel basically, as our leaders are not being completely honest with us about the effects of it. There's cancel culture going on. Even Bill Maher, the talk show host, who is not a conservative at all, is asking folks to stop the cancel culture. So that's going on right now. Makary is calling for our leaders to be honest on all the issues. The risk for kids is exceptionally low, and there's no more than any other disease kids might fall prey to. So clearly, if they give us the numbers, we can make our own decision. People can make their own decision. It seems like now, as far as numbers and effect, this is no more than a mild common cold. There's 4 other coronaviruses out there that come seasonally, and but we're not making new policies and masking over those coronaviruses. But we are once again doing it now on this Delta virus because it's an offshoot of the COVID-19. So anyway, we're concerned that people have lost faith in our public health officials, misrepresentations of data at the CDC. Hospitalizations were not as bad as everyone feared. But it's deceptive, and a lot of people are bothered by that. They don't feel like they're being told the honest truth about it. President Biden didn't achieve his goal of 75% vaccination, so now they're blaming a lot of things and a lot of different people. But if they handled it differently, they might have had a better experience. So that's kind of what we're seeing out there. If they let policymakers lock down again, we could have a stagflation economy. That's a big risk to the economy. We saw it happen in some states, and we certainly wouldn't want to see that happen again. The best thing to do is to quarantine the sick and let the well go out in the economy. And that should be a very limited group. So, and this is our basic concept. If leaders don't listen to the people, that's when the Brexits and the Trump elections and the vaccines not getting a full endorsement, that's when things like that happen. So let's hope that happens, Chris.
Yeah, I mean, I think the one little thing I'll add is I think that it's gotten to the point right now that this COVID strain, if you will, is going to be systematic. I mean, it's going to be everywhere. It's going to be with us for the long term. So I think we've learned from even China, Australia, New Zealand. You have other countries that at one point were 0, and now Delta's back. So there's a lot of you can do as much as you want, but it's just going to be with us, and we just have to learn to deal with it, cope with it as best we can, protect the people we can protect, quarantine the people that are sick, and it's just going to be something we have to learn to live with now.
Yes. Well, and moving on to since our last podcast, a number of very famous Americans have passed away, and we wanted to make comment on them. Just that they're such fascinating people. The famous pitchman Ron Popeil passed away since our last podcast. A former Chicagoan, of course, when he got successful in media, he went Hollywood, but he died in his sleep a few weeks back at the age of 86. Ron started on Maxwell Street in Chicago, which is an area where a lot of illegal trade had happened back in the old days, like an open trading thing. Sometimes illegal goods would show up and other people just hawking their wares. But he was known for Pocket Fisherman, if anybody remembers that product. Mr. Microphone, where they say, "Hey, good looking, we'll come back to pick you up later." Everybody remembers that commercial. He's famous for the term "set it and forget it." Now, how much would you pay if, and then also, but wait, there's more. That was all Ron Popeil. He founded Ronco, developed the Vegematic. He was parodied on Saturday Night Live with Dan Aykroyd, who created the product Bass-O-Matic and parody over Ron Popeil. So he also parodied himself in voiceovers and skits, and then also about himself in The Simpsons. So fascinating guy. Best wishes to the family. Also, Dusty Hill, the lead guitarist of ZZ Top, famous for songs like Legs or Give Me All Your Lovin'. So that's a passing of an era. And of course, former defense secretary twice, the youngest and oldest defense secretary ever in American history, our friend, Mr. Donald Rumsfeld, passed away since the last podcast. So here's to Rummy. And the big news is weed sales in Chicago took off last year, and we're up 10% over May because of Lollapalooza. Many folks might remember we were the host of the Lollapalooza festival that used to be in many, many cities. They consolidated about a decade ago to only in Chicago. And we did have 100 and something thousand people out there in Grant Park watching 4 bands on different stages. And it was great to have Lollapalooza back last weekend, but we noticed that pot sales were up big in the month of July as a result in the month of June also. Anyway, so that's the big news. We'll be back with some interview podcasts very soon as well. And Chris, I think that's all I have.
Yeah, we'll call it a podcast from there. And yeah.
Well, thanks, everybody. We welcome you back to our next episode. Give us a 5 out of 5 ranking if you can, and tell all your friends about the 4-Star Podcast. We will see you on the next episode.